I hate noise, particularly in swing trading. Swing trading today is overloaded with scanners, WhatsApp group, Telegram group, social media. You name it. And most trader they don't fail because they pick the wrong stock or they don't know how to trade it. But they fail because they have no clarity and no defined structure. Today I'm going to show you my exact satellite scanning mechanism which will help you to narrow down let's say 2500 names to 2 to 3 actionable items. Hey everyone, my name is Gaurav. Now, before we start, let's define what is swing trading. Swing trading is a process of capturing high probability moves within an existing trend. Now, we are not investing in those stocks for let's say a year or 2 year, 3 years, but then we are not even scalping for 2 minutes, 3 minutes. But the most important part is swing trading is not a chart game. It's a mindset game and a math game. People think that swing trading is about finding the perfect setup, magical indicator, magical scanner, but it's not. Trust me, it's not. I have tried almost everything, and I have experimented with almost everything to find that magical entry point, magical indicator, magical setup, but it doesn't work, and it's not there. Well, frameworks can be taught, patterns can be shown, scanners can be copied, but cutting losers ruthlessly, identifying your stop loss properly, taking the 4% stop loss without hesitation, sticking to your rules without any emotions. That is not a part of TradingView. So you can copy my system, you can learn from me, but the execution is your discipline, your mindset, and your identity as a trader. And once you accept that truth, this entire satellite scanning framework, it becomes quite easy and starts working in your favor. With that, let's begin with the step one. Right. So the first step is define your style. I always talk about the style and it's very important for us to define it because then rest of the steps become quite easy and quite evident. So before even you think about scanning, you need to decide what you are scanning for. And this is where most traders mess up. So if you look at the market wizard books across all editions, you will find 50, 60 legendary names and all of them are wildly successful. Yet none of them have a same methodology of trading. Some made fortunes with momentum burst, pure supply demand imbalance, oversold mean reversion, continuation breakout. So think about it. Nicholas Davos, he made millions using just one pattern, the Davos box, right? Similarly, Christian Kulamagi, the modern day legend, built his fortune using just one idea, explosive flags. So different style, different structure, of course, but the same outcome, consistency, right? So the lesson for us is you must pick your style and go all in mastering it. Not 10 pattern, 50 indicator, just one clean structure that your brain can recognize immediately because your scanning system only works when your brain knows what exactly you're hunting for, right? So now quickly on my style. So for me, the rule is very simple. I exactly use what Christian Kulamagi uses it. After a clean uptrend, let's say 30% or more, preferably 100%, 120%, higher the better. I look for a tight consolidation near its high. And that shows the strength is holding at the top. Now, once this is defined, my entire job is quite simple as a swing trader. All I do is I identify the strong stock, I wait for the tight pullback or tight structure, enter with a very small risk, and sell it when the EMA suggests. So when your structure is defined and your brain knows what exactly it's looking for on the chart, the scanning becomes quite effortless. And this brings me to the step two, which is determine your universe. Now, before going into setups and all those details, we need to first of all define our universe. So I generally use the market filter, which is India, of course, for today's session and NSE. Now, as of today, which is 7th of December 2025, we receive around 2040 names. Yeah. The first filter which I add here is the liquidity filter. Now, as your account grows, liquidity filter becomes very important because we are trading a tight setup. So here the stop loss would be very tight, let's say 3 to 4%. Now, if you're trading into a illiquid stocks, there is a chances of slippage. Stop loss of 3 to 4% can become 4 to 5%. And in long term, it could be very fatal to our portfolio. So to avoid this slippage issue, we will put this filter criteria of liquidity. So we'll simply go here in TradingView and we'll type price. Yeah, and we'll use the second one, which is turnover, price volume turnover. And so we are basically trying to identify the daily turnover of this of the stock. There is one rule of thumb which you should know that your position size should not exceed 1% of your daily turnover. And let's say if your the stock which you're going to buy, the turnover is around 50 crore, then the position size should not exceed more than 50 lakh. So that's the rule of thumb. Keeping that in mind, and let's take an example in our scenario, like let's say our portfolio is of 1 crore, 1 CR. So, and we wanted to allocate 10%, which is 10 lakh in a stock. The maximum liquidity filter which can put here is 10 crore, right? So when we put the liquidity filter of 10 crore, automatically our number from 2740 has come down to 662. After that, the next step is to put the momentum filter, because this is a swing trade and we want momentum to be strong in that stock. So to achieve that, we want the stock which has already been uptrend. Now there are three ways to filter it. So the first one is performance 3 month greater than 25%. This is quite commonly used, where we are looking for the stock which has made a 25% or greater than 25% kind of return in last 3 months. And the second one is look for 1 month, 3 months, 6 month leader, right? So in the stock which are making new 1 month high, 6 month high, 3 month high, filter those stocks. Last one is which is 52-week high proximity list. Why do we want to look for the stock which is in the proximity of 52-week high? Because these stocks are already strong. They are basically means they are in accumulation phase. They have clear trending characteristic. Now, what is the proximity we are looking for? We are looking for around 10 to 15%, probably 20%. So from 52-week high, the stock is within the range of 20%, 0 to 20%. Right? Now, this is where my 80 to 90% of my satellite rate come from. All right. Now let me show you quickly how to add these three filters which we just discussed in TradingView. The first one is 52-week high. So I simply put high, and you go and choose this one, and you choose 52-week high over here and add this filter. You manually change the range. So we say our percentage 0 to 20%. You can choose 0 to 10%. If you want nearer to the 52-week high, I prefer 0 to 20%, and look at the price, right? So right now I have received 279 names. So all you do is just Control A or right click and add all of them into a red filter. So red for me is basically the master filter. For now, for the purpose of session, I'm adding these filters individually, but what you can do is just you can create one and save it here with different names, right? For example, I have saved it as a 52-week high. Similarly, you can save these three filters individually. So let me go to the next one. So I'll just remove this one and I'll add performance. So I choose this one, and instead of year to date, we choose 3 month and we add this filter. Then we go to the setting and we simply choose above 30%. So this is the one which we wanted to look for, and it will immediately brought down 750 name to 31 name. And again, do the same thing, Control A, right click, move all of them into your master universe, right? And the last one which we want to add is your high. So new high, which is 1 month high, 3 month high, 6 month high. So you just use this one, new high, and you add 1 month high. It will bring down 750 name to 334. Do the same thing, Control A, right click, move it to the master universe. Similarly, you choose 3 month, and similarly you choose 6 month, right? So at the end of this step, you will have a master universe of around 250 to 300 names, depending upon the market, and that will become your master universe. Before we go ahead, let me quickly summarize what we have achieved so far. So we started with entire market universe, NSE and Indian market, so which gave us 2700 name approximately. Then we applied the liquidity filter, which further narrowed down this entire universe to around 600 to 700 names. Then we applied the momentum filters. Now we said that there are three kinds of momentum filters. One is your 3 month, 52-week high, and new highs, right? And we wanted to see all of those stocks. So what we did is we applied those filters individually on that 600 to 700 names, and we moved all of them into our master universe. Next step is quite critical. So if you are a beginner, I would request you to manually scan this 200 to 50 names. First of all, it will train your eyes and your brain. Then it will help you to understand the entire market breadth, and third, of course, is it will help you to identify the sectors in which the money is rotating, right? But now, since I'm a working professional, I would further want to add a one filter to narrow down this 290 names to, let's say, 70 to 80 names. I wanted to talk about as of relative volume. It basically show me the stocks where today's volume is above the 10-day average volume. So basically our vol is greater than 1.2. What I generally do as a filter, right? So once I have moved my 119, all the 290 names to in a red list, I simply choose this as a watch list, right? So what it does is when this filter is applied on red list, it basically brings down this entire 290 names to 83 names, right? And that is my focus list. So all I do is I'll just do a control A, right click, and I move all of them into my A plus list, right? Now the next step for us is to do the manual scanning of the 70 to 80 names. Now this is the very important part of this entire video. What we're going to learn now is to how to reject the stock from 70 to 80 names, how to identify those 2 or 3 stocks, which could be actionable next day. And this is very important step because this will basically help us to avoid all the stocks which are noisy and choppy, which are of wide range. We want to avoid any random spikes. Now, what are the parameters or checklists we are running while scanning the charts? We are basically looking for the stock which is in clear uptrend. Then we are looking if the stock is in consolidation mode or not. We are looking for if there is a pattern like flag or VCP or contraction is there or not. Up and down volume, it should be higher than 1.2. Higher the better, but basically 1.2 is fine. Volume contraction, we want to see the cluster of pocket pivots, price between basically 1151 EMA, because we don't want the stocks which are beyond 11 EMA, like above 11 EMA, because they are quite extended, and below 51 EMA nothing would happen. Now I understand that when I'm talking about these checklist or parameter, it sounds too much, but as I said, and I always repeat all the time, right, the more you practice this on chart, it will become a muscle memory to you, and it will become quite automatic. So the moment you see the chart, it will take hardly 1 or 2 or 3 seconds to quickly look all the parameters, and your eyes will automatically move to those locations, like volume, contraction, prior uptrend, how the market is reacting, whether it's sideways, EMA, how far it is from EMA. So automatically your eyes will start looking for those characteristics in the chart. Now it's quite impossible to run you through all the 90 names in this video, but I have basically narrowed down to, let's say, 5 or 10 names randomly, and I'll quickly just show you what I'm looking into those stocks. Let's quickly look for some examples. The layout says this is the weekly and the top one is daily, and the orange is 10 DMA and this one is 50 DMA. This one looks good but not interesting because of these weak candles, and I see a lot of distribution here, so I'm not interested. I'll quickly move to, let's say, South India. South India again, probably okay structure, but then it's a little bit extended from 11 weekly EMA, so I would want the price to come back to that one. So I'll simply scan some of them. For example, let's go CAT. CAT looks interesting because on weekly it's orderly pullback on 11 weekly EMA, and on daily also it's look cool. A little bit of choppiness, but I don't see a lot of distribution in the volume, so I'm happy with that. So CAT could be one of the possible candidates. Then I know the Torrent Pharma. So Torrent Pharmaceutical, again, it's forming a good VCP on weekly here. There is a prior uptrend, of course, and then good tightness around 10 DMA. So, and then it's one pocket pivot we saw in a couple of days back. So that is a quite interesting aspect. Muthoot definitely a good trading stock. We all know that finance right now is working well. So again, we quickly look for the pattern. Pattern is quite in a tight range of 3 to 4 weeks, but we want the EMA to catch up to this tight candles. But on daily, it looks again good. So this is kind of in a standard way. You simply takes 5 to 10, maybe less than that, to quickly scan all the names, and it will take around 40 minutes to cover 70-80 names. And this is one example I would want to share with you guys as a case study. Of course, in bull market, it's quite easy to spot these kind of trending stock, but in market like this, what we have seen in the last few months, probably this is a dream chart for any of the swing traders. So the stock is Cupid, and again, it's not a buy or sell recommendation, but this is so beautiful stock. I mean, there was no noise, I know, but it was continuously uptrending in the market. It is forming a clean, decent base at every time it's pulling back to its NDMA, and then again it's going up with good pocket pivot clusters. A perfect chart, so every swing trader kind of a dream chart where you don't have to sell the position once you have entered, and you just keep increasing the allocation at every pullback if you got a good entry point. So take it as a case study. This particular pattern, if you see the cup and handle pattern over here, again, that was a beautiful entry point, right? So it was a long base consolidated on weekly chart, and then on daily chart it forming the cup and handle, the pattern we talk about, and after that it given a proper 2x or more than 2x. So, and the last bit which I wanted to discuss is about the daily routines and the frequencies. I'm often being asked that for satellite, how often you run the scanner, and just keep it simple. You only run the scanner when you actually need it. So I take one or maximum two position in swing satellite, right? I play very concentrated bet, and if that position hasn't hit my stop loss, I really don't see any reason to run the scan. And here is why I don't do it. So every single day, some stock will hit 10 to 20%, right? And some stock will form a very beautiful structure. And if you scan daily, you will get tempted to participate in those stocks. So this is kind of a loop which will destroy the discipline and consistency. Okay, so this basically brings me to the end of this session. So we started with 2000 name and we now have 2 to 3 good actionable names. And now one thing is very important, that this entire scanning which we discussed is a very small part of a profitable trading framework. Of course, you need to have a good entry point, your stop loss, your position size, your risk management, your mindset, psychology, discipline, everything. There is an entire package of framework comes when you create an entire profitable trading framework, and that is what we will discuss in future videos. So yeah, hit that like and subscribe button, and I'll see you in the next one. Thank you. Take care.